Bitcoin bulls have limited time to bounce price action. As you can see over here, they have broken the long-term downtrend and it is finally coming back to retest that as support. The question is, do they have what it takes and how much time is left? Well, that's what we're going to address in today's show. So let's get straight into it. And this is on a logarithmic chart. So not really the chart that I necessarily use for most of my trading, but it is still relevant. The long-term downtrend since the all-time highs, as we all know, was breached recently. That took place on the 20th of January, and we're finally coming back down to that all-important level to retest it as support. And a lot of people are quite bearish. I must be honest, from what I've read on crypto Twitter, a lot of people are calling for much, much lower prices and going all the way back down to the range lows. And yes, although that is a possibility, you have to give the bulls a benefit of the doubt as long as they can defend this trend line over here. And this is coming in at 21,473. You can see it matches up as well on our other charts, on the non-logarithmic charts, with the mid-range levels. And it could still spike a little bit low, but what's more important is the closing candles. If it can spike down, reclaim that level, then you have the potential for a possible bear trap, which is coming in place. So we'll address all of that and much more on the lower time frames. I also found some very interesting data on the daily chart, and I've mapped that out historically, what's taken place, and I can't wait to share that with you. So on the crypto bubbles chart over here, you can see on the hourly, pretty much most of the altcoins are starting to make small bounces following a weekend of complete sell-offs. On the daily chart, most of the coins are still currently red, and the weekly, you kind of half and half, with some random altcoins, the low caps like Rose, you have BGB, you have Baby Doge. These are all up more than double digits over there. So interesting market dynamics. You have the fear and greed currently sitting neutral at 48. So kind of in mid-level indecisive territory going into, of course, tomorrow's very, very important CPI data release. So this is going to definitely drive the markets. And if it goes anything like the previous times, usually you see a massive rally the day before. So will this time be different? That's what we saw in the two previous times. You can see over here, we had the CPI, which is marked by the red line. And you had a massive, massive rally that went straight into the CPI up to 18,400. The second time we rallied up to 21,400. And here you have it, price following a similar sort of trend and pattern over there. The death cross on the weekly, that has in fact been confirmed. Again, you can't really deduce too much off of this information. And the reason why is because we've never had it before. This is the first time ever that you've had the 50 moving average cross below the purple 200 moving average. But looking below, we have the SR area that we're looking to see, is this zone actually going to flip as support? And we finally come into that level. So is it going to be a resistance flipped into support? Well, we'll need to wait and see. Currently, you're looking at your 21 exponential moving average, this yellow one. That should be your final line in the sand. If bulls start to lose that, especially on a closing basis, then pretty much you would say that this might be a massive deviation and you're looking for much, much lower prices. Big bull trap would be confirmed. And that 21 exponential moving average right now is coming in at 20,605. So similar levels to what we discussed last week. You're going to see everywhere lines up with that 20,500 to about 21,500. That is the critical control zone. If bulls can hold above that, I give them the benefit of the doubt. If bears can take price below that level, then I'm going to give them the benefit of the doubt, and I would be closing all long positions. So that's basically what I'm watching on the weekly time frame chart. On the daily, it also lines up over here right now. As you can see, if the bearish scenario is to play out, I have it outlined that you should at least expect a bit of a bounce, not necessarily all the way up to 23,000, but you can see this would test as an underside resistance. So still looking for a little bit of upside potential. And I'll draw a horizontal underneath there as a bearish retest, something like that. If you were looking for the bearish scenario, at least a push up to 22,650. And then simultaneously, that would most likely set in another lower high. which we are yet to see. So consolidating around this level, I am looking for that one more push up. And then the question is, how much momentum jumps in behind the bulls once you do bounce off of this level? So daily chart, mid-range is coming in currently at, let's just mark that off. Mid-range is coming in at 21,482. Exactly what I showed you on that logarithmic chart over here. It's the same price levels. All right. The S&P 500. S&P 500 is still very range bound. So we have a rejection from the 0.75. That's 75% of the way through the range, with the range low coming in here, 25% level, mid-range, 75% level, and then the range high. Now I'm going to be on higher low watch. So if this does play out, of course, you have your lows over here. You have your high low. You have your next high low. You're looking for the next high low to form somewhere around this region. Great area of confluence is the mid-range, which lines up with that momentum trend line. So you're looking for the S&P 500 to hold anywhere around that 3987 level, 3987. If bulls can convincingly bounce price off of this zone, I would treat that as a high-low and an opportunity to send it up to the range highs, which is coming in all the way at 4,328. As we know, it's going to be highly dependent on what the inflation data comes out as. If it comes in overheated, then of course expect that range low to break, and you're probably going to get sent all the way down to the 25% level, potentially even all the way back down to the range low. If it comes in as expected, then I would expect that we'll just kind of consolidate around here and slowly start grinding up. If it comes in better than expected, I would expect a quick bounce all the way to the range high. So that's what I'm watching over there. Now, a very interesting topic of discussion is going to be the DXY, the dollar index, the DXY. It has reclaimed the yearly high level. The yearly high level is coming in at 103.49. Now, as you would know, if you are going to reclaim a yearly level, that is extremely, extremely key. That means that you should be bullish on the DXY, looking for much higher levels. The next level of interest is 104. But what I wanted to say over here around the DXY is you don't need to be afraid that crypto can't rally just because the DXY is going up. Yes, most of the time they're inversely correlated. Most of the time they're inversely correlated, but not all the time. If you do look at this chart over here, this essentially shows that the US dollar is strengthening again, but it could also be due to a weakening euro because of how the DXY is composed. It's a bundle of other currencies measured against the dollar. A weakening euro could also create a dollar that is rallying. And I like this chart over here from TechDev. He says, interesting that this liquidity signal just put in a similar double bottom to the DXY's 2 years ago. And he says before it went parabolic on Bitcoin. So over here you have Bitcoin on the top. You can see the parabolic runs. So following the bear market, a little bit of consolidation, and then off it went. Bear market, a bit of consolidation, and then off it went. Here you have the DXY on the bottom. So have a look at that print that we had in 2021. And now you have the dollar that could potentially be printing something similar. If you look over here, what you can essentially see is the dollar is running, but yet Bitcoin can still run with the dollar. So I just wanted to clear the air with that. Total 3. Okay. Total 3 did play out the double top scenario that we outlined last week, and it did come down. I said to you, as long as it's holding above this key level, and you can see the interactions on that dashed line or the dotted line coming in at 358 billion. As long as it can hold above that level, then I would still hang on to my longs. Ever so cautiously, though, I'd hang on to my longs. It is a dangerous environment, but you're looking still for at least one more spike up, very similar to Bitcoin, to form a lower high over here. If this area does start to reject from around that 380 billion on the total 3, then you can expect that altcoins are most likely going to have a hard time, and there's going to be enough momentum to break that level down. But on the inverse, if it can hold this level and it can reclaim above 370 billion, which is over here, and you can see that consolidation. Remember, the bullish case that we were looking at previously was for the for total 3 to continue to consolidate around these regions. So if it reclaimed that level, this could be a deviation. It comes back in above 370 and it consolidates here. Then I think that will eventually lead to a breakout. But it's all going to depend on what happens on this bounce. And I'd imagine all that action is going to take place over the next 24 to 48 hours right before that inflation data comes out. So statistically, what is Bitcoin showing? Well, if you bring up the Super Guppy indicator over here, I did actually back test it, and I had a look at, once you had a confirmed signal, what was the end result of that? How did that play out over time? How many false signals were there? And the results were the following. First, I just want to cover what exactly is a confirmed signal. Well, I consider confirmed signal on the Super Guppy, this is on the daily chart, as soon as the gray turns or the gray disappears completely, meaning that you have green and then blues, the blue EMAs. So the Super Guppy is essentially a conglomerate of exponential moving averages going up in multiples of 3. That's essentially the way that it works. So you're looking for that as a confirmed directional shift. And then as those EMAs spread out like that, then the move becomes more and more mature. So we know what a confirmed move looks like. What does a closed signal look like? Well, a closed signal would be once you start to see the green disappear and you have full gray, so leading into a contraction phase. For example, something like this. So let's say the Super Guppy told you to be short and you're running on the red, you're running a short. Once it turns gray, that is your closed signal. Now, these were the historical results over here. It was actually surprisingly good. So on average, your upside moves resulted in about 171% profit on average. So meaning from the moment this move happened, you could measure from here up 171%. If this played out the way it did historically, that would take Bitcoin, I think it's into the $56,000 region. Now, I'm not saying that's going to happen. I'm just saying statistically, the edge is towards the bulls once you have a confirmed cross. And this is not my opinion. This is the data and the evidence that we have over here. And the reason why is because once you had a confirmed green signal or buy signal, it had an average hit rate of 78.947%, meaning that 15 out of the 19 signals were positive without failing and turning back down, going bearish. But then, interestingly enough, if you do look at the false signals, they resulted in an average loss of 5.45%, which, if you ask me, is not a really massive drawdown. Meaning, if you entered over here and the signal failed, you would have lost only around 5% by the time the signal failed. And if you do look at that and you line that up, so we go from signal given minus 5%, where does that line up with? Interestingly enough, that lines up with the 200-day moving average, which we know is a super, super important level for Bitcoin to hold. So anything underneath that 200-day MA is going to be extremely bearish. That is marked by the white line over here. Currently, that's coming in at about 19,500, which means if you want statistics on your side and you want the odds on your side, technically any higher low that forms above that 200-day moving average should be a buying opportunity for the long term. And again, this is not my opinion. This is simply just looking back at the data and the results. Now, that also lines up with what we saw on this chart over here, which is looking at the cross that we had between the 50 and the 200-day MA on the daily chart. And I measured out on average what is the pullback that happens following the cross, because usually the cross always happens following an overextended move. In this instance, price went up 22.9, so 23%, and we have since pulled back almost 12%. If you look at that, on average, you're looking at about a 12.09% pullback, and that would take you pretty much close to where we were now. It would have taken you to 21,332. And the golden cross also historically has led to astronomical moves in the region of 150 to 200%. I need to go back and double check and back test that. But once you have the golden cross on the daily, it does typically lead to runs towards the upside in at least the hundreds of percentage region. So watching that over there, the RSI, remember, we're also following this signal over here. And that is once the RSI has reclaimed 85 on a closing daily basis, then every single time, I think except for one, every single time it has printed another 3 or another 2. So you have 3 prints that are above 85, signaling that the bulls will take back strength. And you're looking for a mini parabolic run, not necessarily a major full-on blown bull market, but at least a mini parabolic run. What am I saying about all of this? Essentially, what I'm saying is that currently the odds are in the bulls' favor so long as they can hold above the 200-day moving average. If you want to be super conservative on your entries, just scale in slowly but surely leading up to that 200-day moving average. If you lose the 200-day moving average, that's super bearish. And you do want to be on the side of caution. And the reason why is, again, because of this, right? Because of the death cross. We don't know how this is going to play out. You know, all you can do is look at previous death crosses on other time frames and how those typically play out. And typically the way that they play out is you don't crack it on the first time. Sometimes you don't even crack it on the second time, maybe only much later on the third time. They generally govern price towards the downside, and us being stuck below that 200-day moving average, the 200 moving average on the month, I can't even talk English today. We haven't been stuck below the 200 moving average on the weekly chart for as long as what we have over here. So keep an eye on that. That is super important, which is why any longs that you do take, you want to be on the side of caution. Okay, the other daily time frame chart that we have over here, kind of no man's land though as well, in a sense, that being that price is stuck below the key monthly level. Most bears are using that as the invalidation zone. I can tell you now, if price does, let me just grab that pen, if price does get back above that key monthly level, the key monthly level is coming in at 23,954. If they get up above that again, most of the bears will start to flip into long positions. And then you know what that can do, right? Once you're above about 25K, FOMO will set in rapidly, and you could teleport straight to 30K pretty much in a matter of a few days, I would say. But at the moment, stuck in no man's land because you are between the important moving averages. We were looking at the 0.382 as a potential area as well, which I still wouldn't rule out, especially if you have a choppy environment leading into this economic data. If you do see a big spike down like that and it quickly gets reclaimed above, so you drop below the 0.382, which is 20,904, and you quickly reclaim that level over there, that's going to be pretty bullish, right? Then pretty much you can say you're going to target the key monthly, and if you get above that, you're going to be looking at higher prices. So again, cautiously bullish. That's what I would say, cautiously bullish. The other reason why is if you look at the funding rates, they just went negative again. Now, when you have negative funding rates going into a support zone with sentiment extremely bearish, it does create the environment where you have the opportunity for a short squeeze. But high levels need to be reclaimed before you're going to see such a short squeeze. And if you do look on the 15-minute chart as well, pretty much still stacked. So this is live as of right now, still stacked on negative funding, meaning that shorts are jumping in at the moment. And if you can hold that higher low, pretty much those shorts could get squeezed out of their positions. And at the very least, I am still looking for that spike up towards the red line, which would take price up to, assuming if it happened between today and tomorrow, around that $22,500 level. You got your lower highs over here, break above that, and you're going to teleport to the key monthly level, get above that, and you're going higher. Remember, this is still a support zone. So if I zoom out over like that, and we look at this, you got range low, mid-range, range high. This is still a very key level. And unless price holds above here, so you need to see a proper breakdown. For bearish confirmation, you need to see a proper breakdown. You need to see something like this and hold under that level. And then I would say we're going to revisit all the way back down to the range lows. That would look very bad. There's so much liquidity over here, a lot of stop losses that have been built up. That's another thing that I want to bring up, guys. Ask yourself, for those people, which are few and far between, there's not too many people that would have longed all of this over here. But for these people, if you long this over here, where do you think your stop loss is? So you took these positions here, you bought over here, you bought over here, you bought over here, and then price began to rip. What do you think happened with these stop losses? Let me show you what I think happened with these stop losses. So first, I think obvious place, probably stop went over there. Then stop went over there underneath this area. Then they probably continued to raise their stop losses, right? Stops went over there. I would say there's probably quite a lot of stops over here. How high they are, they might be stacked between this region and pretty much where we initially took off. So 20,800, that doesn't mean that you're going to lead to a major breakdown. All that means is don't be surprised if you do see price come down below that region to grab that liquidity. It could be big players that are gearing up their moves for the next leg higher. It would be a very bad situation if you started to see candles closing below those regions. But if you simply see a spike like this, let's say it's a 4-hour candle and that gets left behind as a wick and it quickly reclaims that, that's incredibly bullish. That would be incredibly bullish. I would say with high confidence, you're going to break this trend line and probably make it above the key monthly level in a matter of probably 24 hours after something like that happens. So that's what I'm watching over there. What that means for you, if you are taking positions over here on spot, you might want to have a loose stop loss. What is a loose stop loss? A loose stop loss means that you probably won't have a hard stop where if it spikes down and just bounces straight out of that level, you're going to be taken out of your position. A loose stop loss means that you would want to monitor the price action over here. And if there's a closing candle and things start to look bad and you start to see closes around that lower region over here, then pretty much you log onto your system and you get taken out of those positions. If you're a leverage trader, you should always have a hard stop loss. You don't play with loose stop losses. I know Ran likes his loose stop losses. We always joke with him. He says that he doesn't have a stop loss button on his ByBit account. So that's what I'm watching over there, guys. Same chart over here. Essentially, momentum oscillators are tracking down on the 4-hour chart. Let's take a look on the daily chart over here. You can see, look at this on the daily. Pretty much as long as bulls can consolidate price in the current region, what is consolidate price? Just hold it sideways without a major breakdown. I would say if bulls can do that for the next 24 to 48 hours, then the odds are increasingly in their favor. So bears, if you want to take control, you're going to have to break down prices within the next 24 to 48 hours. Otherwise, it looks like the bulls have another attempt at higher, and this is most likely going to be your higher low. And then we know what comes after a higher low, right? Then you're looking for the next higher high. So that's what I'm watching over there. And if you look at this Byzantine general, he says pretty solid green spot order book delta. And he says the worst case, I could see BTC make another drop below 21,000. So similar to what I showed you on a liquidity grab. And he says, but I don't really see it going lower without a very bad catalyst. Cautiously bullish for now. Could there be a bad catalyst? There definitely could be. I'm sure you all heard. If you haven't, the SEC do want to charge Paxos, or they're gonna file something against Paxos regarding their BUSD issuing of their stablecoin. So they're coming after some of the Binance stablecoin, the way that they have that system set up. The SEC are questioning that. And who knows, maybe that leads into bigger catalysts. Definitely possible. This is why we trade what's in front of us. We trade the chart in front of us. If the chart is signaling to us to completely get out of the market, we get out. Bear in mind, guys, I'm being extremely aggressive over here with my entries because this is only the first higher low, right? We printed a higher high. I'm now bidding the very first higher low that comes after that. That's almost like catching a falling knife. It's quite a tricky game to do. So the reason that I'm doing it is, firstly, I do want to get an early entry. Secondly, my system has signaled for me to go long. I trust my trading system. One of the age-old discussions that happen amongst traders is when they sit around the dinner table and they chat about historical things within their trading career, they say, well, you know, if only I had listened to my trading system said go long, but I second guessed my trading system, and that could have been the best trade that I ever took. But I didn't listen to the trading system. So if you do have a trading system, listen to the trading system. If you don't have a trading system, get a trading system. Trading systems it's like the trend is your friend till the end of the trend. Your trading system is your partner, it's your buddy, it's your best friend. And it takes time to develop, by the way. And not only develop, I had a trading system, the same trading system that I use now. I've had this since 2018. I can tell you that most of the bull markets, I missed out on probably the first maybe like 60% of the move because I didn't trust it. I was one of those guys that second guessed the trading system. But as I become more mature in my trading, I no longer do that. My trading system is showing anything pretty much above 19.5 is an opportunity, and I'm going to listen to that trading system. So I hope that helps you guys. Is there anything else? Let's have a look over here. Yes, liquidity levels. So 21,000. There it is, 21,000. Interesting what I just told you, my trading system, anything above 19.5 is essentially an opportunity. And there you have the final liquidity, which that would definitely test me if we had to get down to these levels over here, whether I'm going to add to my positions or not. Upside liquidity, 25K. My ideal scenario would be spike down over here, grab the liquidity at 21, chase up to 25K, and grab that liquidity. Then you can book some good profits over there. So guys, I think that brings us to the end. Also, do not forget that we do have this competition that's coming up, or it's still in motion. We're giving away the Rolexes. We've given away one. We actually had three, so we still have this one here. The black one, Submariner. And then we have the blue and gold. This one's more rare. Submariner, blue and gold. I think these are valued at like $25,000 or somewhere in that region. So if you do want to participate in that, make sure that you have an account with ByBit. All you need to do is click the link over there, take a trade. Bitget is for the black Rolex over there. Click the link, take a trade, enter the Discord. The Discord has a whole lot of alpha as well. It shows over there. That is part of the competition. You need to get into the VIP Discord. And that's it from me, guys. Please give the video a like, hit the bell notification, and subscribe to the channel. And let me know in the comments as well. What are you doing with your trading positions? Are you long? Are you short? And I also want to know how many of you actually have a trading system. And if you do have a trading system, tell me what time frame it operates on. I'd love to know. That's it from me, folks. I will see you all on tomorrow's video. Have an absolutely stellar day. Let's see how the volatility treats us over the next 48 hours. Cheers for now.